There has been front-loading, no doubt. China is obviously very wary of Trump tariffs, and the expectation is that they'll still be levied at some extent. Whether it's a 60% initially stated by Trump or something less, we think it's probably going to be, average maybe 30%. But nonetheless, this may not be able to last. I think while we have seen front-loading, we will probably need to see further weakness in the yuan to maintain export performance. Yes, there will be continued trade diversion, and we'll see some margins of exporters being hit with price reductions, but the room to do that is much more limited compared to 2018, and that's why we're probably not going to see China being able to withstand the impact of tariffs as easily as they were last time round.
And that's because of the weakness in the yuan compared to 2018, but also the state of the economy with some of the sort of more deep structural challenges? Is it a combination?
That's right. Look, I think it's the fact that we've already seen this margin absorption by exporters. A lot of that's taken place. I mean, we know profit margins have been shrunk dramatically. There's not a lot of room there. Secondly, if you really, the yuan has been weakening. The nominal effective rate is rich, so we do expect further pressure. But from a real effective exchange rate perspective, i.e. adjusting for trade and inflation differentials, the yuan is actually weak on that basis. So maybe there's less room on a real basis. And thirdly, we know that countries such as the US are focusing on trade diversion. And so it may be a little bit harder for China to divert its trade through Asian countries. There's no doubt that Trump's new incoming administration is going to be looking at countries such as Mexico, Cambodia, Vietnam, etc., to try and avoid that trade divergence as a way to escape tariffs.
But if China doesn't have an overcapacity problem, as it sort of states, and that's been its position all along, then why do we have these companies across various sectors scrambling to cut prices to stay competitive? We've seen that in the solar space and even a lot of talk, obviously, about the EV space, which has obviously caught a lot of international market attention.
That's right. Look, I mean, I think this really goes down to the problem, I guess, one of the big problems in China's economy as a whole. There is a massive supply-demand imbalance, and a lot of the stimulus measures that we've seen in the last year or so have been supply-orientated, but demand side of the economy hasn't picked up. And so a lot of these manufacturers have been having to sell a lot of these goods overseas because of lack of demand. That means trade with Asia has picked up. But even then, as you mentioned, EVs is a classic example where there is a global oversupply. There's a glut, and that's forced margins lower, it's forced prices lower, and that, again, seems unsustainable in this market.
When you look at people saying the Chinese currency is going to weaken beyond 8, do you get worried?
Well, I mean, look, our forecast is 750 end of this year, but we have done a model estimate that if we see 60% tariffs, then it sounds very much a point estimate, but we could see dollar CNY at 842. So above 8 is not a huge surprise in this environment. Actually, I was in Hong Kong last week. I saw a lot of clients out there, and there's a real pessimism on the yuan. And